Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks fall as Tesla misses profit estimates for a fourth straight quarter. Cloud computing and search boosts Alphabet's revenues, but the company's CEO urges patience on its AI investments. Big bank bonanza as European earnings come into focus. We're going to bring you the numbers from BNP Paribas, Deutsche Bank and UniCredit, all in the next few minutes. And Kamala Harris attacks Donald Trump in her first presidential campaign rally. She says the election is a choice between two different visions of America. A big day for earnings with a focus on bank numbers crossing right now. Deutsche Bank, of course, the major German lender, coming in with a miss. The redhead across the terminal. Deutsche Bank's second quarter fixed income and currency sales and trading revenue coming in below the estimates, 2.1 billion euros. The estimates had been for 2.15 billion euros. So a modest miss when it comes to fixed sales and trading for Deutsche Bank. In terms of revenues coming through, the loss in terms of the second quarter for Deutsche Bank coming in at 143 million euros. That is the net loss for the second quarter versus a profit this time last year. The company, the bank, is reaffirming its 2025 financial targets. It is also looking at the details when it comes to the investment banking revenue. It does see 2024 investment banking revenue higher year on year. In terms of private banking revenue, it is essentially flat. That is a view year on year for Deutsche Bank. The redhead, again, this is a miss when it comes to Deutsche Bank's fixed income and currency sales and trading. The stock up around 30% year to date. We're going to hear from Deutsche Bank's CFO, James von Moltke, in just under an hour. So stay tuned for that interview. BNP Paribas over in France, we're bringing the results from that French lender as well. The redhead crossing the terminal right now. Second quarter net income. It is a solid beat for BNP Paribas. Net income in the second quarter coming in at 3.4 billion euros, comfortably above the estimates of 2.95 billion. In terms of fixed income, currency and commodity sales and trading for this lender, coming in a little softer than the estimates in terms of the revenue from that part of the business. 1.1 billion euros versus the estimates of 1.19 billion. Net income, 3.4 billion above the estimates. Let's bring you now the interview with the CFO of BNP Paribas, Lars Machenil, speaking to Bloomberg's Caroline Connan.
I am cautiously optimistic of what you see in the Eurozone. Yeah? You see the growth picking up. You see there is demand. There are evolutions. So what you clearly see is the ECB is shifting. Actually, the whole economy is shifting. Inflation is tapering off. Therefore, the ECB is also reducing the interest rate. So the economy is picking up. And that's basically fueling a positive spiral.
We had a lot of volatility with this month of June until early July. Could you please tell us exactly what this volatility impact is on your business?
Yeah, no, if you look at, so there was, given the political, but not only the political elections in Europe and in several countries, that led to some uncertainty of what would happen. There was uncertainty about what the ECB and the Fed would do. So there was all that uncertainty that all of a sudden started to crystallize out. Yeah, you saw the ECB acting. You saw several indicators that were like the PMI and all the other ones that were evolving positive. And that's the whole evolution that you saw in all of the countries. So you saw these evolutions. You saw that what we had in the UK, you saw it in France, you saw it in Belgium, you saw it in many of those countries. And yes, there was some overall European volatility related to the elections that were going on all over the place. But that's just what it is.
Last week, the ECB kept rates on hold, and we had the president, Christine Lagarde, saying that the September meeting is wide open. What's your scenario? Do you still expect 2 rate cuts before the end of the year? And what impact could this have on your business?
Our stance is that there will still be 2 rate cuts this year. And so probably the rates will gravitate towards 3.25. So that's basically what we have in mind. I remind you that for BNP Paribas, the fact that the rates, if they are at 3, 2.5, 3.5, intrinsically, for us, that is fine.
BNP Paribas CFO Lars Machenil speaking to Bloomberg's Caroline Connor on the back of that beat for BNP Paribas, and it is a beat for UniCredit as well. The Italian lender beating in terms of net fees and commission income, coming in at 2.12 billion euros. It's a beat as well in terms of net interest income for this Italian lender, coming in at 3.57 billion euros, above the estimates. Second quarter revenue as well, also a beat at 6.33 billion euros, above the estimates. Here's the redhead on UniCredit then. Full year net revenue. It is raising its guidance for full year net revenue above 23 billion euros. It had seen it at around 22.5 billion. So UniCredit raising its forecast and outlook for full year net revenue above 23 billion euros after the beat in the second quarter. Also coming through with some details in terms of return of cash to shareholders via dividends, as well as a buyback of around 1.7 billion euros. To the Spanish lender of Santander right now, and the lines crossing on this one. It is a beat for Santander, the Spanish lender, in the second quarter. Net income of 3.2 billion euros. The estimates had been for 3.13 billion euros. In terms of net income for Santander, that is what the line is. That's the redhead. That's the key focus. Net interest income, interestingly, coming in a little bit below the estimates at 3.47 billion. The estimates have been for close to 12 billion euros in terms of net interest income. A little softer for Santander in the second quarter, but it is the net income that comes through with a pretty decent beat for Santander above those estimates. We're going to be speaking to that company's CFO, Jose Garcia Cantera, speaking to us a little later today, 7:30 a.m. UK time here on Bloomberg. So the earnings coming through thick and fast in terms of the banking sector here in Europe. Let's check in on the markets as they weigh up all of this, but also some of the tech earnings that came through. Uninspiring was the top line in terms of Alphabet and Tesla. Concerns certainly about Tesla as they push out and demand patience. Patience being asked of Alphabet as well in terms of AI investments. Patience for Tesla. And in terms of the European picture, as we weigh up the miss that came through for LVMH as well with a concern around China. You're looking at European futures down 0.6%. Here in the UK, the FTSE 100 looking to losses of 22 points. S&P futures down 0.6%. NASDAQ futures also lower by 0.9%. Right now. Concern around the health of tech and those AI investments. Let's flip the board and look cross assets with a focus on the Japanese yen, which has actually shown 3 straight days of gains. We look ahead, of course, to that BOJ meeting next week. 154 right now in the Japanese yen versus US dollar. 424 on the benchmark US 10-year. $81 a barrel on Brent, up 0.2%. And gold at 2,417. Another gain there coming through for the yellow metal, up 0.3%. Let's get to the tech story then. Google parent Alphabet reporting a second quarter revenue beat boosted by cloud computing demand and search ads. For more on this and other US earnings, let's bring in Bloomberg's Kriti Gupta. And I touched on some of the AI part of this story for Alphabet. They did beat. That is the top line for Alphabet. But there was patience that's being merged by the CEO in terms of those AI investments. What for you really stood out from the Alphabet story?
Well, you're right. On the surface, it all looks great, except the stock actually dropped after hours. And they're really responding to this idea. And this is, I think, this risk that comes with being an A-plus student is that once you don't hit that A-plus bar, you really get punished for it. And that's exactly what you saw in the after-hours markets. Because, yes, it did grow, but you had some pretty notable laggards. Advertising revenue, for example, which is really what Alphabet shares respond the most to, grew 11%, and yet grew at a slower rate than the quarter before. So the analysts on Wall Street basically saying, yes, they're growing, but the growth pace is decelerating, and that's not a positive. They're also talking about the fact that another major positive for this was that the likes of OpenAI, for example, are not eating into that search engine dominance. That is a really big deal. But remember, Alphabet is also still a major tech company. They're also trying to make those acquisitions. And I think in the last 24, 48 hours, a lot of the focus has been on that $23 billion offer they made for Wiz, and we know that Wiz had turned it down in favor of an IPO instead. Of course, Alphabet not commenting on it, but it's interesting because behind the scenes, you're seeing lots of reporting talking about the fact that maybe that decline was really due to the CrowdStrike outage, which again wasn't necessarily addressed on the call itself, but Alphabet really leaning into the idea that cloud offering, cybersecurity, AI is going to be driving the future growth of the company.
Okay, the challenge of being an A-plus student. I like the way that you frame that, and speaking from experience, no doubt, Kriti Gupta. in terms of Tesla, it's a challenging story here. It's hard to describe Tesla right now as an A-plus student. 4 straight quarters of disappointing profits coming through for this business. What were the key lines for you?
Well, they have a lot of kind of new projects that they're working on. Tesla, we think of as an EV company, but they're talking about robo-taxis, humanoids, et cetera, et cetera. In the last, I think, a week or so, you also had headlines that Tesla has lost a market share in the U.S. markets. They're now dropped to less than 50% of the EVs in the state. So to actually see this as a disappointing number coming out on not just deliveries, but the revenue as well, is pretty telling. But the reason Tesla stock keeps kind of rising and hasn't on the long term is because there's these new projects that keep getting introduced. So a lot of the focus has been on when does that robo-taxi kind of introduction really show up. It looks like they pushed it back to October 10th. More announcements, more clarity was expected this time around. Investors just didn't get that.
Yeah, and just a prototype when that comes through, if it comes through in October. Once again, we've seen this before from Elon Musk as well, pushing out those timeframes. Kriti Gupta, excellent wrap-up of Alphabet and Tesla. Thank you very much indeed. Anchor, of course, of the opening trade. Now, to US politics. US Vice President Kamala Harris has launched her presidential campaign with a rally in the swing state of Wisconsin. Harris touted her economic agenda and attacked Donald Trump, referencing her past work as a public prosecutor. Let's get more from Bloomberg's Vonnie Quinn in Washington. Vonnie, what did you take away then from Harris's what was essentially her first real campaign speech as the presumptive nominee for the Democrats?
Yeah, you're going to see that line a lot where she talks about having known Donald Trump because she has prosecuted predators and cheaters and fraudsters. It gets a good reaction, and it also leans into the fact that she's been an AG, she's been a prosecutor in previous lives. As for planks off her platform, we know that she's going to say that she's not going back to the chaos of the Donald Trump years, that she wants to build up the middle class, with that being the defining goal of the presidency. Reproductive rights, extending healthcare, childcare, paid family leave. These are all extraordinarily important planks for Kamala Harris. Now, we still need to hear more about foreign policy and other parts of her agenda. But what's next is potentially the vice presidential pick. And it seems to be narrowing now to 3 people, 2 governors of potential swing states, and also Mark Kelly of Arizona, the senator. He would be helpful because one of the areas that the Trump campaign can attack Kamala Harris on is the border, right? They call her Joe Biden's border czar. I do want to point out as well that we might get that a little sooner than we thought, because it looks like now the DNC is organising to have Kamala Harris be able to accept the nomination much earlier than the DNC. It could happen as early as August 1st. Donald Trump, for his part, he's getting a little antsy. He held a call with reporters earlier and said that he does want to debate her. In fact, he'd be opening to debating her more than once.
OK, Bloomberg's Vonnie Quinn with the latest in terms of Kamala Harris and US politics. Thank you very much indeed. Coming up, Asian stocks under pressure after an unimpressive start to the Mag 7's earnings season. More market analysis next. Plus, Equinor is among the first of Europe's oil majors and gas producers to report second quarter results. I'm going to be speaking to the CFO later. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's check in on the Asian markets right now. Avril Hong standing by in Singapore. Red on the screen, Avril. And my focus, though, the Japanese yen strengthening. What are you looking at?
Tom, the bleed is bad in the region today. I mean, early in the session, it was about how the Mag 7s, the 2 of them coming through with underwhelming results. That was what hit sentiment. But then as the session progressed, what we really saw was Japan stocks dragged. And this is because of the declines accelerating on the automaking stocks as the yen rallied. Dollar yen started the day at around 156. Look at where it's seated now. And I'm going to talk more about what we're seeing in Japan in a bit. But let's talk also through what we're seeing in the Chinese stocks, extending losses amid signs that the national team is pulling back support for equities. Let's flip the board and talk through Japan, because there's chatter in the markets that we could see a supersized hike from the BOJ next week. Not just 15 basis points, or rather not just 10 basis points, which is what we saw in March, but 15 basis points potentially. And that's going to be bad environment for Japanese bonds today. We saw a really soggy auction for the 40 years, and the yield on the 10-year continues climbing. The yen is not just rallying against the greenback, but also against the Aussie and the Kiwi dollar, because they have the slide in commodity prices to contend with. So we're focusing on tech. We're also focusing on Japan here at the Asia Pacific Today, Tom.
Avra Hong in Singapore with a check on the Asian markets and the read-through from the tech earnings. Thank you very much indeed. With the focus also on the Japanese yen. Strength coming through. Third straight day as we look ahead, of course, to the BOJ meeting next week. OK, let's get more analysis on these markets and bring in Benedicte Lowe, equity and derivatives strategist at BNP Paribas Markets 360. Benedicte, thanks very much indeed for joining us Wednesday morning, bright and early. Let's talk about the earnings story. Let's start there with a focus right now on tech, and then we can move on to the banking space in Europe. But the tech story and the top line seems to be Alphabet coming through with a beat, but question marks about its AI investments. You don't have to talk about individual stocks with us, but in terms of the valuations when it comes to mega cap tech, are they justified if the AI play, the AI monetization is further off into the future? How are these valuations justified when possibly that part of the story has yet to come through?
Yeah, so definitely we're watching all of the tech earnings that are coming from. As in terms of valuation, it is indeed quite elevated, but the key focus will be on the broad-based sectors. How would those earnings come from? And we've seen a rotation from the more Nasdaq into the Russell. We've seen really strong outperformance of the Nasdaq, of the Russell, 14% over the Nasdaq over the very short period, 2 weeks' time. But we think really the short part of the short covering has been done, and we think the long term will come from the earnings, and that's the key things that we need to wait for.
So in order for that to be clear, in order for that rotation, and as you say, it's been quite pronounced, for that rotation to continue and have legs, we need to see the earnings story coming through.
Yes, exactly.
To power that ahead.
Exactly. So we've got like the flows part is done. We had the really unloved, unowned part of the market that did this catch up. But really to have an underperformance of the tech that continue through time, it really would need to come from like the broad-based sectors earning disappointing, yes.
And then you would look to reallocate around small and mid caps. What exactly are you looking for that would be for you the trigger to say, OK, we're going to reallocate around small and mid caps, we're going to fund it by selling down on mega cap tech?
Yeah, so the one thing that is very important for the small and mid cap part of the equity market is really when the Fed and the ECB is going to cut rates, when they're going to continue to cut rates, how will the economy perform? They're really dependent on the economy performance. So if we have the case that the Fed and the ECB cut rates and the economy remains strong, this is the moment where you get the cyclical that tend to outperform. But if we get the case that they cut because the cycle is kind of ending and you get like underperformance in terms of growth, this is when they tend to underperform.
We've had some big bank earnings coming through this morning. Deutsche Bank a bit of a miss, but otherwise we're looking at some positive numbers coming through from the likes of UniCredit, BNP Paribas, Santander. What do you do with European banks at this point?
Yeah, so European banks in was of our top pick. We've got a model on the earnings side that said there's still some upside on earnings. We've got the rates that are, yes, indeed, coming down in Europe, but they're still at a decent levels. The cyclical recovery is still quite there. We've got some good numbers in terms of growth, so that tends to be quite positive for banks. So that remains one of our top pick in Europe. Yes.
There was a Goldman line crossing the last day or so saying sell European stocks that get the bulk of their sales from China. We're seeing the impact once again. We've seen it in terms of Burberry, we've seen it in terms of Hugo Boss, in terms of Swatch, and today, or most recently, actually, in the last few hours, LVMH, and the hit there, down 14% in the Asian region, and most of that coming through from China. Do you agree with that sentiment from Goldman? Do you want to be looking through your portfolio and weeding out those companies that get the bulk of their sales from China?
Yeah, so this is an interesting story. When you look at the health of the consumer in Europe, it's actually quite strong. The level of cash, they're okay. The level of spending should be okay. But actually, this is not feeding through into higher spending. The propensity to spend is just not be realizing in Europe. So you should expect some kind of second-hand help from China, but it's also not coming. So this is what we're saying. The H2 recovery that we've expected, that the market has kind of been discounting short-term weakness on the expectation of that H2 recovery, is actually not so much feeding through the stock market at the moment. So this is a bit worrying for sure.
What does that mean for the discount then, Europe versus the US? Does that persist? There was some expectation earlier in this year that maybe we're going to get a bit of a close in terms of the discount, the valuation gap between European and US stocks. What is your take on when that turns?
Yeah, there's actually so this was our expectation ahead of the Q2. We've seen there was political risk in Europe that kind of delayed that recovery. We have some kind of like a bit of sentiment that was capped on Europe given the political risk. And really, for Europe to be outperforming, we need to see more flows coming into the region. To have more flows, we need to have more confidence, and the confidence will come from that recovery that we were expecting. That is a bit delayed, but that's still on the card, and also from like political risk kind of waning in the eurozone.
In terms of the catalyst for European stocks going forward, the return of cash to shareholders, the dividend story, is that a play that you want to be leaning into? Do you want to be looking for those companies that have the balance sheets where they're returning cash to shareholders, where they're looking at dividends, where they're looking at buybacks? Does that prove to be a catalyst for European stocks?
Definitely. In that part of the cycle that we are at, we are in the recovery part of the cycle, and really you want to look for the higher quality companies. So this is definitely something that we have on the card. The companies who are able to deliver dividend backs to their shareholder, they're able to kind of get the money in their balance sheet to kind of reward the shareholder is definitely something we're looking at.
Okay, so looking for quality, and for that rotation story, the focus on earnings as to whether or not that continue. Benedicte, Lowe, equity and derivatives strategist at BNP Paribas Markets 360 with a deep dive on these markets. Thank you very much indeed. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, two other stories making the news this Wednesday. US Secret Service Director Kimberly Cheatle has resigned after taking responsibility for security failures at the rally where Donald Trump was shot. Deputy Director Ronald Rowe will lead the Secret Service as acting director. Both Republican and Democratic lawmakers called for Cheatle to step down over perceived security lapses. French President Emmanuel Macron says he will not pick a new prime minister before the end of the Olympics and doubled down on his call for a political truce following weeks of turmoil. The left-wing alliance's preferred candidate for PM has been dismissed by President Macron. Meanwhile, Politico is reporting that France's far right has signalled it's ready to support the far left in its bid to repeal Macron's controversial pension reforms. Coming up, a slight miss on fixed income and currency sales and trading revenue at Deutsche Bank. Our interview with the CFO of Germany's biggest lender coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks fall as Tesla misses profit estimates for a fourth straight quarter. Cloud computing and search boosts Alphabet's revenues, but the company's CEO urges patience on its AI investments. Big bank bonanza as European earnings come into focus, with BNP and UniCredit performing better than expected, while Deutsche disappoints. We're going to hear from the German lender's CFO next. And growth slows at LVMH. China's luxury slump hits sales of fancy fashion and pricey booze. We have the details. Let's get you up to speed, though, on what has been happening in terms of Deutsche Bank earnings. The German lender suffering its first quarterly loss in 4 years. That's as trading slowed. It also booked a charge that we knew about. We knew it was coming, tied to a legacy issue at Postbank, the retail unit. Interestingly, in terms of the buying and selling of fixed income securities and currency, so the FIC part of the business, key driver, of course, of income at Deutsche Bank, that declined 3% in the quarter. That was below estimates of a 5% gain that had come through from some of the biggest Wall Street banks in terms of the competition, the gap between Deutsche Bank and its Wall Street competitors. So those were some of the key lines on Deutsche Bank. The redhead across the terminal when these earnings dropped was on those second quarter FIC sales and trading. The revenue's coming in at 2.1 billion. The estimates had been for 2.15 billion. So a little softer when it comes to FIC. Then it had that impairment charge, of course, linked to Postbank. It does see 2024 provisions slightly above 30 basis points. The investment banking revenue, though, is seen higher year on year in 2024. We've been speaking to the CFO. Take a listen.
The second quarter was absolutely a continuation of the first. So momentum in the businesses, on the revenue side, also just client engagement, market share growth. We're meeting our commitments to shareholders around expense management. So we've delivered the second quarter in a row at a 5 billion expense base. And we're managing the balance sheet and also capital ratios, essentially powering through the setback that we had, which was the Postbank litigation provision.
And that's looming very large over this quarter and potentially the next. So what can you give us in terms of an update, in terms of discussions, where that is right now?
Look, little to update. Basically, with the court has been going through the timeline that was laid out back in April. So we've provided a brief. We're waiting for the written conclusion, and then we'll react. I'm sure the claimants will react as well to that. It's very hard to assess really the direction of travel from here. We'll have to see what the judgment or the next statements from the court sort of tell us, and also what the posture of the claimants is going to be.
And is that 1.3 the sort of worst case scenario? Is that the sort of ceiling on? Yeah.
We've booked to the maximum claim. We have interest that accumulates over time, but we've essentially booked to the maximum claim.
And if this group of investors does win, does it open up a can of worms in terms of other litigation from Postbank?
Well, look, not on Postbank. I mean, there's one other sort of there's one other unaffected claim that we think is extremely remote. But no, what it does open up is some uncertainty in the German takeover code, which is one of the reasons that we've been fighting this case for 14 years. And so there's some interesting questions of law, because I think the interpretation being pursued here is very novel. And hence we're vigorously contesting the claim.
And so you have contested the claim, saying that Deutsche Bank has done nothing wrong. Do you think that indicates that the sort of regulatory system leaves room for investors to take advantage of this? And how does that bear on kind of your thoughts about taking over businesses in the future?
Well, it does introduce risk, and we think this transaction isn't necessarily alone in having the fact pattern that we went through, and hence I think getting certainty back into the German system about this type of takeover would be sensible. And for us, it's about contesting the claim, hopefully delivering some better news to shareholders around this. But managing it in the best interests of shareholders and also the legal matters at stake here.
And what shareholders are also going to be caring a lot about today is how it's going to bear on your sort of buyback plans. And there was sort of some ambition for the back half of the year. It seems more remote. How is this going to bear on your payouts?
Well, look, we're really happy with how we've been able to manage through it in the second quarter. So with a CET1 ratio of 13.5%, essentially we more than offset the impact of the litigation provision. That sets us up well, I think, going into next year to continue delivering on the commitments we made to shareholders around a capital distribution trajectory. As you say, for this year, I think prudence would dictate that we step back from seeking a second repurchase authorization. We've already returned, 1.3 billion to 1.5, billion to investors so far this year, and so we think we're demonstrating an ability to stay on track.
And so the 8 billion through 25 is still intact in terms of return.
We've set a goal over that 5-year period of 8 billion. I think we're in a position to significantly exceed that 8 billion, even with the setback we faced this quarter.
And then a question: does a settlement on the question of Postbank, could it mean a buyback in the back half of this year if that?
If there's a positive outcome, the judgment is expected on the 21st of August, so we'll be looking for that. And if in the event that there's a positive outcome, that would certainly change our positioning.
Okay, and then outside of that and into the sort of the broader business, looking at the outlook, what are you seeing in terms of FIC and trading? And what do you see this quarter, and how do you see that developing?
Well, it was an interesting quarter. We're actually pleased with our performance in the quarter, and we've continued just to execute on our strategy of sort of building and investing in the business, and that's showing in market shares and momentum that we had. For us, a relatively weaker environment in rates and FX, especially in the early part of the quarter, sort of offset still strong growth in emerging markets and credit trading. And so that sort of netted out to essentially flat to last year. Looking to the back half of the year, I think you're going to see more directionality of the rate environment and maybe a little bit more volatility that would be helpful, again, for the rate and FX complex.
Okay, the CFO of Deutsche Bank, James von Moltke, speaking there to Oliver Crook in Berlin. Let's check in on these markets then as investors adjust to the earnings story. So a bit of softness coming through for Deutsche Bank, but wins in terms of beats coming through, at least for BNP Paribas, UniCredit, Santander as well. And then there's the tech story with Alphabet and Tesla, slightly underwhelming in terms of the picture that came through there. European stock futures pointing lower by 0.6%, just shy of 0.6%. The FTSE 100 here in the UK down by 23 points at things stand. That's what's being flagged. S&P futures pointing lower by 5%. 0.5% after a little softness by the end of the close of play on Wall Street yesterday. Nasdaq futures lower by 155 points, down 0.8%. Let's flip the board. The Japanese yen showing some strength. Interestingly, some of those short positions being squeezed. 3 straight days now of strength for the Japanese currency. We're looking ahead to the BOJ meeting next week, currently at 154. There you go, versus the US dollar, up 0.5%. The US 10-year, 424. We're looking ahead to data, of course, out of the US later this week with a focus on GDP and then inflation, the PCE, core, of course, inflation watch for the Fed on Friday. $81 a barrel on Brent, up 0.2%, and gold still holding on to these gains. 2,414 per troy ounce for the yellow metal, up 0.2%. Let's get to part of that earnings story then, with a focus right now on Tesla, where shares have slumped after the EV maker reported its 4th straight quarter of disappointing profits, pushing back as well the release of its highly anticipated robo-taxi. Chief Executive Elon Musk also said plans for its gigafactory in Mexico are on pause.
Giga Mexico, I think we need to see just where things stand after the election. Trump has said that you will put heavy tariffs on vehicles produced in Mexico, so it doesn't make sense to invest a lot in Mexico if that is going to be the case.
OK, let's bring in Bloomberg's Asia transport reporter Danny Lee in Hong Kong. Always has the finger on the pulse firmly of all things Tesla. Look, Musk talking about tariffs, talking about delaying the build-out of this Mexico facility, and yet he is a supporter, a financial supporter as well, of Donald Trump leading up to November. What did he have to say about tariffs? This seems a bit of a head-scratcher to me.
Yeah, the contrast around tariffs, because when you look at Tesla's business in China, with the amount it exports and produces in China, rather, and exports to the rest of the world, places such as Europe where they're very much at risk and they're trying to negotiate with Brussels on getting lower tariffs imposed on them. And then you've got this contrast with Mexico, where it doesn't seem to want to invest as much given the risks of higher tariffs. And so clearly there is a bit of a head scratcher there, given his full-throated backing of Donald Trump, and whether he's in the best possible seat to seek potential exclusions perhaps one day should Donald Trump come into office once again. But when you look at the broader earnings, though, clearly the struggles of having a lower set of Q2 sales is feeding into the profitability picture, although revenue was up. So a bit of a mixed set of numbers. However, the backdrop is talk of tariffs, which means higher raw materials and higher finished goods cost. It does hurt Tesla.
And Tesla and Musk, not for the first time, talking up some of these big items like humanoid robots, the robo-taxi. Is this classic Musk hype, or is this the future of Tesla?
I mean, this is all stuff that investors really want to hear. Stuff around the robo-taxi, stuff around humanoid robots. And so laying the groundwork and setting clear targets of when these things come into pass is important for trying to define Tesla's future in the AI space. Specifically when you talk about the Mag 7 stocks, Tesla really wants to be up there. But look, the fact that the robo-taxi is still delayed, the fact it's been delayed, confirming a Bloomberg scoop back over into October, and that's only going to be a prototype. And so that, plus with other bits of the product lineup being the affordable EV that Tesla might roll out by the first half of next year, this is all stuff. This is not going to help earnings over the next coming quarters. This is going to be feeding into earnings next year. So it's still a tough quarter and a tough couple of quarters for Tesla ahead.
Bloomberg's Asia transport reporter Danny Lee, thank you very much indeed with the latest out of Tesla and its potential future trajectory. Right, sales growth at luxury powerhouse. Switching focus now. LVMH slowed last quarter as wealthy shoppers in China reined in spending on pricey Louis Vuitton handbags. Christian Dior couture. For more, I am joined now from Hong Kong by Bloomberg's Asia Global Business Managing Editor Rachel Chang. We've seen with other luxury companies as well, of course, Chinese consumers are pulling back on their spend. Rachel, what are the challenges specifically that LVMH is facing right now?
Right, so LVMH's earnings definitely a disappointment because, the luxury giant is very much seen as perhaps more resilient because it has so many brands. It's very exposed to China. It was hoping that this bellwether would really be doing better. But what we're seeing is in the region that includes China for LVMH, sales plunged 14%. That's very disappointing. What the company is saying as well, it's really about regional dynamics. It's because the Chinese consumers are going to Japan, where the yen is very weak, to make their luxury purchases. We did see a 57% jump in Japan for LVMH. So what that really means overall, though, is that China remains extremely volatile and extremely complex for all luxury makers to be able to handle, and there's not a clear picture that China's recovering at all.
Rachel, what about the luxury sector more broadly?
Right, so all eyes are on Kering, which is just coming up later today. Kering has already issued a profit warning, so we know that it's actually not going to be pretty. It's very reliant on the brand Gucci, which hasn't been doing well in China as well. And I think what people really want to see is next week, Hermès is reporting. Hermès is very much just focused on that ultra high end, which has been the one that held up throughout the entire pandemic. Both LVMH and Kering are more exposed to that sort of aspirational upper middle class consumer that is more reactive to the global economy. So if Hermès holds up, then at least that's good news for the industry that the ultra high end is holding up.
Yeah, Hermès is going to be really interesting, as you say. It's been a bit more resilient, hasn't it, to this luxury downtick in China. And it's not just handbags, it's not just posh clothes in which we're seeing a bit of softness. It's the drinks as well. So the champagne for LVMH, but also when it comes to Rémy Cointreau and their sales numbers dropping just in the last few minutes in terms of cognac sales being hit by a slowdown in both the US and China. So revenue falling 15.6%. Falling 15.6% at Rémy Cointreau, the French company, of course, on an organic basis. Expectations had been for a drop much lower than that, just shy of 11%. Rachel, just give us your take on what we're seeing from Rémy and what it tells us more broadly about demand for high-end liquor.
Right, so definitely a disappointing outcome for Rémy. The entire sector as well, luxury, not just liquor, but luxury goods, is really adjusting from that post-pandemic boom last year in China. But the picture in China is definitely looking very bad for liquor, especially because not just the slowing demand, but we know that Rémy and its rivals are going to be exposed to this cognac probe that China has launched in retaliation to what the EU is doing to its electric vehicles. So we know that it's looking at supposedly lower prices for cognac in China, and whatever tariffs might come down from that will definitely affect Rémy and some of its key brands in China.
OK, Bloomberg's Asia Global Business Managing Editor, Rachel Chang, with all the latest in terms of the earnings, with a focus, of course, on the softness coming through from China when it comes to high-end drinks and luxury. Rachel, thank you very much indeed. Coming up, we're going to switch focus to the energy sector because Equinor is among the first of Europe's major oil and gas producers to report second quarter results. Our interview with the Norwegian energy giant's CFO is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. A focus on the energy space now. Equinor saying its second quarter was marked by, quote, strong operational performance. This after Norway's biggest energy company posted profit in line with estimates after managing to offset the impact of outages at key fields. I'm joined now from Oslo by the CFO of the business, Torgrim Reitan. Torgrim, thank you very much for joining us. Let's talk about the results. Let's focus right on now on the quarter that you're seeing right now. I'm particularly interested in the LNG trading business because last quarter that did very well. This quarter, what are you seeing in terms of the trading business when it comes to LNG and how that positions the business going forward?
All right. Thank you, Tom, and good morning. Yeah, it's a strong quarter with good strategic progress. We had very solid operations, leading to a 3% production growth. And delivering, strong financial results, $7.5 billion in operated income. And we are well underway to deliver on the $17.5 billion in cash flow from operations that we have said for this year. And then, capital distribution. We are continuing with a generous distribution, $14 billion for this year alone. That represents 18% of the company in capital distribution. So that is coming on the back of a very extraordinary year a couple of years back. We maintain very financially strong with a negative net debt of 3% and a cash flow of, or cash position of $32 billion. So it's a good basis to continue to build the company. On your question on LNG trading, yeah, that continues to be strong. And it is sort of, we see arbitrage opportunities across the global space, and the European market is becoming very closely linked to the LNG markets.
Yeah, it's interesting. The IEA have put out a report. They put out a report a couple of days ago suggesting that European inventories would be back to about 90% shortly, imminently. What is your outlook in terms of the winter season for Europe and those gas inventories?
Yeah, no, great. So I mean, Europe has sort of moved from being a market priced on piped gas to now, after the terrible war on Ukraine, be linked to LNG. So it's in effect an LNG price market. So the gas prices are quite a bit higher than they used to be. And you're right, there are high storage levels currently, coming off of a mild winter. So it's a comfortable situation, but we see that it is fragile, it is sensitive, and we must be prepared for volatility. It will always be the weather that sort of steers the market in the short term. So on the demand side, a cold winter clearly impacts European prices. A warm summer in China, as we see now, is actually having a positive impact on the European prices as such. On the supply side, we currently have a lot of hydro coming into the power market, implicitly impacting the gas prices. And that is due to a lot of rain this year. So weather is sort of very important. Then, Asian demand, we should not sort of underestimate the importance of that into the European market. We see an 8% growth in demand in China, and that is sort of helping on European prices.
Okay. On oil, there had been an expectation that this quarter would be the tightest quarter for oil. That's not really playing out. Why is that?
Yeah, so the whole dynamic in the oil market is there is clearly capacity available, but we clearly see that the trade flows put limitations on sort of the pricing. I mean, also as an effect of the war in Ukraine, we see Russian flows going through Asia, and that creates, clearly trading opportunities and market opportunities for players like us in the oil and gas market. We do see sort of the oil market to be fairly priced at the current time. But we are prepared for volatility, and as a company, we clearly are set up to manage, our business at significantly lower prices than we currently see. But we do see the current pricing as sort of fair. Yeah.
You saw reduced output from your US portfolio. What is your plan to kind of turn that around into the second half?
So, the second half, I mean, the portfolio in the US is producing very well. It's sort of one of the largest cash contributors to the company. So on the oil side, the decline we saw was related to a maintenance program on a specific field, Caesar Tonga, and some reduced gas production just to respond to the lower gas prices that we see in the US. That is coming back pretty quickly, the oil side, and on the gas side, we will continue to optimize around price. So US has become a very important part of Equinor's portfolio. It is a significant cash flow contributor and sort of very effectively in sort of managing both low and high prices. So it is coming back, and then we continue to invest both on the oil side and on the gas side in the US.
Let me ask about the UK. You have an 80% stake in Rosebank. Rumours that you're looking to sell off that stake. Can you confirm that you've been marketing this field?
Well, first of all, Rosebank is a very important development, and it is a good development. Over the last couple of years, we have taken on more. We acquired Suncor's position in Rosebank and currently have 80%. Normally, we will be happy with a lower percentage, and sort of we will consider, farming down part of the Rosebank development. But Rosebank is a very important projects also for the UK.
So
it's going to create.
Torgrim, are you confirming? Can you confirm that you're looking potentially to sell off that stake?
We have said earlier that sort of we will be interested in sort of farming down part of that asset. It is.
And when would that deal come through?
We are not going into any specifics on those things, but we were not driven by a timeline. We are driven by value and value creation in any of the sort of transactions that we do. Okay. So we don't have any specifics in that regard.
Okay. Equinor CFO Torgrim Reitan, thank you very much indeed for your time. Walking us through the results and how it positions the business going forward after that slight beat in terms of income after tax, $2.15 billion in the second quarter for Equinor. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. A big day in terms of the earnings story when it comes through for the tech names. Some of the mega cap tech stories in the US. Coming through with the details in terms of the numbers. And Alphabet, it was a beat. It was a beat in terms of the cloud part of the business. It was a beat in terms of that core search engine. YouTube a little softer, but EPS coming in above the estimates, $1.89. Revenue also a beat. But there was patience urged when it comes to the investments around artificial intelligence. Do investors have patience when the valuation of Alphabet is stretched? Some would say, as it is. Let's flip the board and have a look at Tesla as well, because there was also patience urged by Elon Musk. Yes, 2024 is going to be a challenging year for Tesla, but look ahead and some of those futuristic bets are going to come to play and come to pay off. That is the take from Elon Musk when he's looking at the robo-taxis, when he's looking at the humanoid robot. But for now, a straight fourth quarter, 4 straight quarters in a row of disappointing sales coming through for this EV maker. And a time frame, once again, we've seen this before with Tesla being pushed back, this around the robo-taxi, so much focus on there, and it's only going to be a prototype when it comes through in October. Let's flip the board and have a look at another story. A big day, of course, in terms of European earnings, and we're getting a reminder of the challenge of China and the softer Chinese consumer and the exposure there. Just look to LVMH. Goldman Sachs saying you want to be selling down European companies that get the bulk of their sales from China. Here's the gap in terms of what we see in terms of the stock performance of those exposed companies versus those that have less Chinese exposure. Coming up, 7:15 UK time, we're going to be speaking to the CEO of the private banking group EFG International, and at 7:30 a.m. on a big day for earnings, Santander's CFO is going to be speaking to the team on the opening trade as well. That show coming up next. Stay with us. This is Bloomberg.